Hello guys, you're welcome once again to this channel. In this video, the new year is coming and I know every single trader is planning on how the next year will go, all right? But then I don't want to really talk about strategy in this video. I want to talk about fixing your mindset, because the fact is every single trader, beyond your strategy, there are other factors which are more important in determining your profitability in the market. Beyond strategy, there are things like risk management, like trading psychology you need to master. So it's not enough to have a strategy that has over 90% edge in the market. If your attitude to the market or mindset to the market is not good, chances are that your strategy is not going to yield any profit for you. So as we enter 2026, what are some of the things to look out for in your mindset, or in how you see the market, in how you approach the market, in how you respond to the movements of the market as a trader in 2026? The most important factor that's going to play a major role in how successful or profitable you are going to be in 2026 is your mindset. And I've been preaching this for some time now. And in this video, I'm going to basically take you through some few things you would have to work on if you are going to be profitable regarding your mindset. All right, so I want to take you there. But before then, if you are new to this channel, can you subscribe to the channel and put on the notification bell so that in case a new video is uploaded, you will be notified early. You can share this channel to your colleague traders, even those who are profitable, so that they will learn some one or two things which I've been able to come up with when it comes to forex trading. All right, but what you are seeing on the screen now is two trades I entered yesterday and today on Euro JPY. All right, so on the Euro JPY yesterday, I caught this trade here. And seeing this trade, this is what happened. I don't know if I should give you a breakdown, but I noticed that this place, the market has reacted up at this place. The market reacted at this place, reacted at this place, then reacted at this place also. Because it has multiple touches and the market was already in an uptrend, I will basically look for a buying opportunity, right? I will look for a buying opportunity. So when the price got to my support zone, I noticed that this particular candle here is a hammer candlestick. So I jumped in the trade right from here after the market came down. So what happened is something like this. All right, the price has formed a hammer here. Sorry guys, let me make sure it's clean. The price formed a hammer here like this, came down here, then I entered right from here and went straight up. All right, and I did not wait for it to hit the take profit, because I saw a reversal at this point. Looking at this point, I saw the price might really reverse at this point. So when it got here, I was like, no, let me just exit the trade, and I exited, and you can see what happened. The price came all the way, broke this particular substructure here. All right, and we came here down here. Then today was when I caught this particular trade as well. You see this particular trade where the hammer is, this hammer candlestick was my confirmation. So I entered initially. Really, always the market will do something like this. It will go up, come down to break this particular candle here. All right, then it will start moving up. So what happened is I really wanted to jump in fact, because I was going out. So I entered and my stop loss was here. All right, I think I'm still in this trade now. I got out. Yeah, I got out. So I entered and the price started reversing to this point, knowing confidently that it will not hit my stop loss. I left it and it got to this point. This was the point I exited the market before I recorded this video, because I saw this particular one and this particular one and this particular one. I was thinking the price would definitely reverse from this point. All right, reverse and form something like this first. As you can see my arrow here, right, before it goes up and go up. So I'm out of this trade currently, but if I was still in, I think I would have made some few profits, I think. So this is basically how I approach the market. The strategy is very simple. The main concept, you can watch the previous 4 videos I posted on the main concept. This is a new strategy that has an edge in the market. All right, so you can take advantage of that by going back to my channel to watch all the videos. Yeah, so quickly, let's get into the business of the day, fixing my trading mindset in 2026. All right, you have to know that your strategy alone cannot deliver profit for you. You have to work on your mindset. All right, when you read this particular book by there's a book I bought the last time, The Disciplined Trader by Mark Douglas, and I recommend for everyone listening to me, The Disciplined Trader. And of course, see the reversal here, as I projected. Because of these projections here, I am sure that the price will definitely reverse here before it buys again. So I don't want any problem. My projections, I believe in my projections, so I'm out of the market. But I was talking about buying the book, The Disciplined Trader by Mark Douglas, or The Zen Trader, or Trading in the Zone. Yeah, Trading in the Zone. You can also get that book. The 2 books I'm recommending are, let me just try and type it here. For the 2026, you have to get the Disciplined Trader by legendary Mark Douglas. All right, then the second one is Trading in the Zone. I forgot the author, but I think it will be Mark Douglas. You can just look for set the name and you go for that book. These 2 books will help you very much in 2026 as you enter. All right, any business you know will help you. You need to have knowledge or wisdom about it. So make reading a priority for you. All right, so in 2026 we are reading these 2 books, and I'll be giving you updates. I think somewhere in the middle of the year I'll be breaking down the things shared in that book. I'm already in the middle of the Disciplined Trader, and it has really changed my perspective to the market. All right, my mindset and all that, my patience, my confidence, my fear, greed, and all that. My greed quotient have been at least I've had a new perspective to the market. That's what I'm trying to say. So make sure you read these 2 books. The Disciplined Trader, all by Mark Douglas, and Trading in the Zone is going to really help you in the coming year. All right, so I think I can claim this because you have it already. All right, the Disciplined Trader and Trading in the Zone. So yes, in 2026, our mindset, how do we deal with our mindset? Let me take you to a note I made and talk about that here. Yes, I think I'll get it here. Let me see if I can bring that up. I'm sorry, guys. Okay, yeah, I think it's here. Very great, very great, very great. So fixing my trading mindset or psychology for the next year. The first thing I want to talk about is I'm not trading to impress anyone, and you have to understand that we are in the forex industry because of how the industry looks like. All right, luxury is more or less like a normal thing, and most of the time you are like, when you go on social media or you go to YouTube or Instagram, you see the traders who are already profitable. Their lifestyle seems to make you think that okay, there is this, so I have to go in hard, I have to do this, I have to sometimes over leverage, I have to over trade, I have to do poor risk management because I want to win fast and all that. So the fact is, you are not trading to impress anyone, and you have to understand no one is as really interested in whatever you are doing. No one is interested in that. So you are not trading to impress anyone. Just take your time, work on your strategy, work on your mindset, and do what will help you align with your personality. Don't buy into the pressure in the industry and do poor risk management or do bad trade management. All right, so do not trade to impress anyone in 2026. I'm not trading to impress my colleague traders. I'm not trading to impress anyone. And the simple way to go about this is to know that don't tell anyone you are trading yet. You know that you are not yet profitable. Even if you are profitable, you are not consistently profitable. So don't tell anyone yet that you are trading. Why am I saying this? Because they'll be giving you pressure and asking you, so how far is this trading thing? Have you made your first $1 million? Then you are like, nah, I'm not. They'll be like, oh, come on, what shows that you are really going to make it? And you see that kind of pressure from your peers or your colleague traders or people who have no idea about trading. All right, let me tell you something. I've been trading for about 3 years consistently, right? And the fact is, no one in my family knows this. No one in my family knows this. Are you getting that? I'm doing it intentionally. I don't want the pressure. Is that okay? I don't want the pressure. That's for me. So do not trade to impress anyone. That's what I'm trying to say. Do not try to trade to impress anyone. All right, don't trade to impress anyone. I don't know if that one makes sense. Number 2 is I'm not in competition with anyone at all. It is related to the first one. You have to understand you are not competing anyone. The only competition you are facing is yourself. Trying to become better trader day by day. All right, trying to become a good risk manager day by day. So the competition you have is with yourself and your edge in the market. All right, so you are not competing with anyone. Are you getting that? You are not competing with anyone. The fact that your friends had a profitable trade yesterday doesn't mean you should also have a profitable trade another day or the same day. You have to understand that you can only get better by developing yourself and don't compete. The idea of competition doesn't even make sense. I get it. In trading, you don't compete with anyone. That's the second point I want you to get as you are entering 2026. I want to make the video brief. That's why I'm rushing. The third one is I'm here to make money, but not at an unbearable risk. Now, the fact is, no one enters the trading industry just for the fun of it. Not at all. And if it's just for the fun, then it's not worth the kind of risk, the kind of time and effort you put in learning. But you are here to make money. You are here because you know trading will set you free and make you financially independent. All right. But then, in as much as you want money, make sure you are not over risking. Are you getting that? I remember one time I organized a class for some people when I was teaching lot size. And I told the person there's 0.01, which is a basic micro lot, and then you can go for 1.0, 1.5, 2.5. And the more your lot size, the more money. The guy said, I will always be going with a bigger lot size. And I laughed. The guy didn't understand, but after everything, and I gave them a demo account to try to try whatever they've learned so far, he understood. You know what I'm saying? So do not over risk, do not over leverage. Go for money is okay, but not at a risk you cannot bear. The reason most of us are not able to, be a disciplined trader is because we risk more than we can lose. So you're always panicking. What if this doesn't go in my direction? What if this doesn't go in my direction? And all that. Let me go back to see my chart here and see how it's going. Okay. Yes, let me see how it's going over here. Okay, amazing. It's actually going in that direction I wanted. Yes. So yes, do not overtrade. All right. Go for profit, but at a bearable risk. You have to know that trading is highly probability business. So if you're entering a trade, the first question to ask yourself is, chances are that even if my setup is confirmed, chances are that I can lose this trade. Now, if I lose this trade, will I be comfortable with the amount of money I'm losing? I get what I'm saying. So once you're able to decide on that, because trading is 50-50. Anytime you enter a trade, you have 50% chances of losing, 50% chances of winning. I get it. It doesn't matter the kind of setup you want. What people call sniper setup and all sniper entry, there's always 50% chance of winning or losing. So you have to also take into consideration, what if I lose? So with that, I'm not going to overtrade, I'm not going to over risk, I'm not going to use a lot size. That's not in alignment with my current account size. Are you getting that? So make sure you go with that. So don't trade at an unbearable risk. Always check your risk management plan, which is the fourth one, and I think I've talked about that already, so I won't spend time. So work on your risk management. All right, check your loss size. Check your loss size. Always check your account balance, your equity, everything. Make sure you are doing the right thing, and do not risk. This is very important. Sometimes we overlook this because we need money. Do not risk more than 1% of your account. 1% of your account. Are you getting that? Do not risk more than 1% of your accounts, please. So imagine you are having an account of, let's say, $1,000. All right. So 1% of $1,000 is what? Just calculate 1% of $1,000, and let's see how it's going to go. I want to take my plastic calculator. 1% of $1,000 is actually $10. Someone will be like, all the $10 I should raise just $10. All the $1,000 I should. Interested, all right, and all that. So that is risk management for you. Is okay. So always trade according to your account size. All right, the max you can risk. All right, max risk I've done is actually 1.5% of my account. 1.5% of my account. I don't do more than 1.5% of my account, and it depends on the trade I'm taking. If I know that this trade is really a good setup, I will go for about 1.5%. But there are days, this is a good setup, but you are not really sure, you are not confident. As you just go for 1%. Risk or loss. Are you getting that? So please don't risk more than 1%. It's very important. The goal is not just to become a profitable trader. The goal is to become a good risk manager. That's the attitude, and it's very important to understand that. It's okay. Don't just focus on the money. Focus on your attitude to the market, right? So don't risk more than 1.5 or 1% of the account. Then the next one I want to talk about is your strategy. Your strategy. You need to have a solid strategy. A strategy that has an edge in the market. All right, that has an edge, and you can adopt one strategy. Is okay, and test it on about 10 to 15 different trades. Just that strategy. Even if you make a loss, make sure you are still going with that strategy until after 15 trades or 20 trades. Then you see actually the edge of the market. So how do you calculate the edge of the? So you just check the number, the total number. Let me help you with that. Check the total number of trades you took with that strategy. Total number of trades taken. All right. Let's say we took a total of 30 trades. Check total wins. All right. Total wins. Let's say you took a wins of about, let's say 19. All right. Then total losses. It will be how much? That will be let's say 8, and break even. All right, let's say break even is 1. All right, so let's add the break even to, let me add the break even to the losses, so that I get 11 losses. So now you have to check the edge of your strategy. Is okay by calculating using 100% and seeing how. But already you can see that if a strategy has 19 wins and 11 losses, of course that strategy is already profitable. There's no way you are going to win 100%. It's okay. So if you have about 19 wins and 11 losses, that means your strategy is actually very profitable. It's okay. So assuming you have 15, how about that one? This strategy is still profitable because the 15 trades you took, if you are using a risk management, right, risk to reward ratio, let's say 1:, risk to reward ratio of, let's say, of, let's say, 1:3. Is okay. That means if you win, all right, if you win, let's say you are making about, let's say if you win, you are making $90. Is okay. And if you lose, you are losing $30. Is okay. That means 15 wins is what? 90 times 15. All right, 90 times 15. These are things to check. Is about $1,350. Are you seeing that? and then you lost, and 30, right? One loss is 30, so 30 times 15 trades to is how many? 30 times 15 is what? Just $450. So you can see the overall this strategy is profitable, even though you have the same wins and losses. But you can see the profit is what? About $900 more. About $900, more in profit. So that means the strategy is actually very, very profitable. So you have to check all these things. So find a strategy, and I recommend that you go with this strategy. Let's go together. What I call the May concept, all right? May concept, and you can refer to my YouTube channel for more videos on that particular concept. Every single video I've shared on my channel is with the May concept. I've not used Trinity concept, I've not used SMC, I've not used ICT. It's okay. So it's a simple strategy I use, and I recommend that you go back to my channel to learn about the May concept. And you can actually send me a message, drop a comment in your comment section. I will just give you a direct access. There's also my Telegram link in the description. You can actually take it and connect with me. I'll teach you in case you're not getting anything about the May concept, all right? Then the next one I want to talk about is avoid the fear of losing. As I already said, all right, forex trading is 50% win, 50% lose. Growth is because, or become better traders because you've conquered the challenges in the trading, all right? And you always lose. But if you have a good risk management, like I just showed you, a good risk to reward ratio, consistent one, right? If you are going for 1:3, that means every single of your trades you are going for 1:3. Let me show you something about the trade I was in before I recorded this video. You can see this. Let me show you. If I take this, you can see the risk to reward ratio is like 4.33, which means that I'm risking $1 to make $4.33. So imagine if this trade goes, I leave it to hit my take profit. It's okay. I will win 4 times what I would have lost. Let's see this one, 4.73. I was saying, so me personally, all the trades I enter, the least I go is 1:2.5. Is okay. So you have to also work on that. 1:2.5, 1:2. So once you have a consistent risk management plan, you don't have to be afraid of losing. And you have to understand losing is part of the game. There's no single trader who doesn't lose. There's no single trader who doesn't lose. So losing is part of growing or becoming a better trader in this market. The next one I want to talk about is affirmation, disciplines, and accountability. Have some set of things you tell yourself every day. I'm not an emotional trader. I don't react to the market. I'm a disciplined trader. I have mine pasted right in front of my table where I sit to trade. All right, so just have that, be disciplined, read that book I recommended, and have accountability systems. It can be your friends who are trading, they keep you accountable. You can have a journal to guide you, a trading journal, and every single thing here is okay. So let's take advantage of these things as we enter 2026. And these are what we want to learn in 2026 about our mindset. I'm not trading to impress anyone. I'm not in competition with anyone. I'm here to make money, but not an unbearable risk. My risk management is okay. I have a good strategy. All right, risk to reward ratio, avoid the fear of losing, trading journal, and all these things. All right. Thank you guys for listening to this particular insightful ones. I believe it's going to help you. Subscribe to the channel for more updates. See you.